Hello, my dear friends. This is your friend C. Jatin Agarwal, and I hope you are enjoying this Stipend to Salary series. So, today we are going to cover various budget-related amendments which has been recently introduced by Nirmala Tai. And as a chartered accountant, these are relevant for us to understand the economy as a whole, as well as to understand the direct and direct tax amendments which will be relevant in our practical work. So, let's see that what all amendments have been brought this for this financial year 25-26 by the budget. So, starting with the overall understanding of the budget, that how India earns, how basically Union government earns its income and where it spends. So, we'll have a general introduction about it. So, for Indian government, if we specifically talk about, so rupee means income comes from sources of income are out of 100%, 22% comes from income tax, 5% from the excise duty, which is levied on alcohol and cigarettes like this, and GST contributes 18%, and other various indirect taxes and corporate tax contributes 17%, and customs contribute 4%. Non-debt receipts, non-debt capital receipts contributes 1%. Non-tax receipts like fines, penalties, and other various tax receipts contributes 9%, and out of the total 100%, 24% they will source from borrowings and other liabilities, which will amount to basically a deficit, which is called a deficit, fiscal deficit basically. So this is the overall scenario. And if we talk about the spend side, so out of 100%, 4% government spends towards pension, and 20% towards the interest payment for the borrowings and past borrowings which it has taken, 16% towards the various central government sponsor central sector schemes. It is excluding defense as well as any subsidy. 6% towards the major subsidies, 8% towards defense, and 22% towards various states share of duties and taxes. 22% give to states, 8% finance commission other transfers which it makes, and 8% towards the centrally sponsored sectors. Various sectors which are sponsored by center, like education are there, and some health sector are there, so contributes 8% towards that, and 8% is other expenditure. So this is how government spends. Now you see, sir, what is this 100% amount, what it totals to? So it is approximately 50 lakh crore rupees. Let's see that how it comes to 50 lakh crore rupees. Talking about the receipt sides, that how the money comes to the government, there are two forms in which money comes to the government. First one is your revenue receipt, second is your capital receipt. So revenue, if we talk about, are the various sources which we have read here, like income tax, union excise duty, GST, corporation tax, non-tax receipts, and customs. So these are revenue, and borrowings and this non-debt capital receipts are the capital assets for the government. So for the receipt size, government is estimating it to be increased. Like for 24-25 revised estimates for 30 lakh crore rupees. Now government is estimating 34 lakh crore rupees for financial year 25-26. On the other side, for the capital receipts, if we talk about, the government is estimating the capital receipts to be lower to 16.4 crore rupees from the budgeted estimates of 24-25 or 16.9 crore rupees. The capital receipts are like borrowings and non-debt capital receipts. So government is estimating to lower its borrowings, and is estimated good amount of receipts from revenue receipts basically. Now talking about the expenditure side, that how this 50 lakh crore rupees is spent by the government. So, and what is the progress, what's the quantum of capital as well as revenue expenditure based on which your stock market runs. So presently government is estimating 15.5 lakh crore rupees over capital expenditure. In last revised estimates it was 13.2 lakh crore rupees, but budget estimates it was somewhere around 15 lakh crore rupees, right? So it is not showing a much increase. On the other side, if we talk about the revenue expenditure, you see that it was basically 37 lakh crore rupees for 24-25 budget as well as revised estimates, but now government has increased this expenditure to 39.4 lakh crore rupees. So it is like increasing step taken by the government in form of revenue expenditure. So government is more oriented to consumption focus in this budget. So that's why like this budget is sought to be consumption oriented budget. As you compare these receipts and expenditure, you can see that 34.2 lakh crore are your revenue receipts, and the government is estimating to spend 39.4 lakh crore rupees. So more than the revenue receipts, it is spending on the revenue expenditure, right? So reverse would be the case for capital expenditure. That's why it is called a consumption oriented budget basically. Now let's see that various basically deficit factors which are considered in the budget. First one is your fiscal deficit. Fiscal deficit basically denotes shortfall in government revenue compared to its spending. So the is basically your revenue, government ka revenue minus government ka expenditure basically denotes borrowing of the government. So it is estimated to be 4.4%, lowest as compared to the last 4 years. On the other side, revenue deficit is the realized net income less the projected net income by the government. So realized or net income ka difference, it is estimated to be lower since last 4 years to 1.5%. On the other side, effective revenue deficit denotes the actual deficit after productive expenditure. Basically, the deficit in revenue minus the deficit in subsidies made by central government to state government for such revenue related items. So like that, it is estimated to lower down to 0.3%. And primary deficit, if we talk about, is the fiscal deficit minus the interest payment of previous borrowings. Previous related borrowings ka interest payment, we will deduct it from fiscal deficit. This is called the primary deficit. So all of these are showing a declining trend as per the government. So it's a positive sign for the economy that our deficits are increasing, and in future our interest payment would be decreased. Now focusing upon some of the trends, like center's tax revenue. Center ka tax revenue is going to increase. We can see by this green line in the trend, and the total non-tax revenue is also going to be increased. And this non-debt capital receipts, other than debt wali capital receipts, like monetization of various assets, income from that, it is also showing an increasing trend, and the total transfer to states also showing an increasing trend as per the budgeted estimates, right? So this is a basically trends which the government budget is showing. Now, what are the various major items in which government will increase expenditure? So defense would be at the highest. Like government will spend 5 lakh crore rupees approximately to defense, rural development 2.66 lakh crore rupees, home affairs 2.33 lakh, agriculture 1.71 lakhs, education 1.28 lakhs. Like this, government is showing its various expenditure among various major sectors. Now, if we talk about the general focus of the budget, that what it is focused upon, so primarily government has divided into four major areas: agriculture and MSMEs, financial reforms, and like that. So firstly, government for the agriculture, if we specifically talk about, government has introduced a Prime Minister Dhan Dhanya Krishi Yojana. In this scheme, 100 districts will be chosen, and in that 100 districts, crop will be focused upon, irrigation facilities will be improved. So and multilateral funds will be basically convinced to invest the funds in that agriculture district based commodities and products. So that will be focused upon for the majorly 100 districts will be covered in this scheme. Second one, to increase the cotton productivity, a 5-year mission will be launched to increase the cotton productivity. The farmers will be provided additional credit facility in the form of increased limit of KCC from 3 lakh rupees to 5 lakh rupees. And high yielding seeds, an mission will be introduced for to increase the productivity and production of high yielding seeds, so that the crop production would be increased. As you know that makhana is a majorly makhana is basically approximately 99% of makhana is grown in Bihar itself. So it is not that any state biasness is there. 99% makhana is there in Bihar. So a makhana board will be established in Bihar to enhance its productivity, production, and to provide the better prices to the FPOs, farmer producing organizations there. And government will try to focus upon Atmanirbharta in the pulses, various pulses items which are there. And a 6-year mission will be launched for its implementation. And for the rural economy, government will continuously focus on through the various schemes which are there, right? Then the other general focus is towards the MSME in Make in India. And if I primarily focus towards the capex for your tourism sector, government is focusing upon development of 50 tourism destinations, and they will consider them as tourist destinations and will help in development of general infrastructure for those destinations. So that would also be a source of revenue for the government. And various people of India, like recently Mahakumbh is there, which is a great source of revenue. Like that, 50 more destinations will be introduced, considered as a tourist destination. And for MSMEs, if we specifically talk about MSMEs, are those which are contributing approximately 36% of India's GDP. Approximately 5 crores or 1.7 crores something MSMEs are there in India. So to improvise their progress in the economy and their contribution in the economy, government is constantly focusing upon major amendments have been made for the MSMEs. Like a credit card will be issued to micro enterprises. Firstly, 5 lakh credit limit would be there, and 10 lakh such cards would be issued for the micro enterprises itself. The definition of micro we would cover later portion. Second is that for the first time entrepreneurs which are there, so for 5 lakh first time entrepreneurs, government will provide a term loan of up to rupees 2 lakhs. A new scheme will be implemented, new scheme will be brought upon for this implementation in the next 5 years. And manufacturing mission will be there with the mandate to focus upon ease of doing business, MSMEs, technologies, quality and skills. And there is also a promotion of labor intensive sector, so that the labor people should not lose their employment. So for that, government is focused upon promotion schemes for the footwears, leather sectors, which are more driven by the labor based technology. Second one is the toy sector, and food processing sectors are also covered in this scheme. A new AIF will be introduced with the contribution of approximately 10,000 crore rupees by the central, and rest by the AIFs. Approximately total contribution would be 90,000 crore rupees for promotion of startups to fund the startups. Those AIF will contribute toward, will fund the startups, so new ecosystem would be developed so that the startups would get more added advantage. And for startups, another scheme is there, introduction, that the extension of 80 IAC exemption to startups given, so that has been extended by further 5 years, and up to, if the startup commences operation up to 1st of April 2030, then the said exemption would be applicable to that startup. So these two schemes are there for startups. And for MSMEs, another, that significant enhancement of credit availability with the guarantee cover would be there. In that guarantee cover, for the MSEs, micro small enterprises, the cover would be increased to 10 crore rupees. For the startups, cover would be increased to 20 crore rupees. And for the exporters, term loan, for term loan, it is up to 20 crore rupees. Government will provide such a basically guarantee cover to the banks so that they can issue the loans to the startups or MSCs which are there. Secondly, there is a revision in classification criteria of MSMEs. Earlier, investment criteria for micro, small and medium enterprise was 1 crore, 10 crore, 50 crore respectively, and turnover was 550 and 250 respectively. Now the investment has been multiplied by 2.5 times, it has increased, and turnover has been increased by 2 times each slab, like 1 to 2.5, 5 to 10. Let's take it with an example. So if you are having an enterprise which is having turnover of 2 crore rupees, and which is having investment of 2 crore rupees, and a turnover of basically 9 crore rupees, so that will be classified as micro enterprise, because both the criteria you are inside this micro enterprise category. But suppose with the investment of 2 crores your turnover exceeds 10 crore rupees, it is 11 crore rupees, then you have to be categorized in the small enterprise, because you are exceeding any one of the criteria which is there in micro, so you are falling under small enterprise, so you would be classified as small enterprise. So these criterias and the limits have been revised. So because of this, more entities would be covered under this MSME. So basically, they will receive the faster payments, and compliance burden would increase on the large corporates which are dealing with them, because there is a payment stipulation limit of 45 days. So that would be there. So they will receive the early payments. It is an enhancing step for increasing the pace of MSMEs in the economy. Another focus area towards the financial sector reforms by the government, like Grameen Credit Score Framework is there to serve the credit needs of small help groups, self-help groups members and rural areas. And some board is established, central KYC to be rolled out, and for the mergers, a faster approval would be there. And for insurance sector, a foreign direct investment limit increase from 74% to 100% with some specifications and criteria. And investment friendliness index of states would be there, that how many, that how a particular state is supporting for the investment friendliness. and that index would be there. Some FSDC mechanism would be there, and that tourism destinations we have specifically talked about. So this would be there. These are some general areas for the financial reform sectors, and there are some general focus areas for that. Some state specific sector or sector specific proposals have been introduced by the government, like for LEDs, LCD TVs, exemption has been given, and looms for textiles, capital goods for lithium ion batteries. These exemptions have been given for Make in India. And for the shipbuilding activities, 10 years exemption has been given. And for the handicraft sectors, export promotion, duty free input would be there. Like this, sector specific provisions are there. Now coming to the income tax, there was a change in slab rate of the income tax as well as the basic exemption limit. If we talk about that, rebate has been increased. Now, if your income is up to 12 lakh rupees, then you will not be required to pay any tax for the financial year 25-26. So here the slab rate has been revised. We'll understand it through an example also in later portion. So let's see, if your income is up to 4 lakh rupees, then no tax, 4 to 8, 5%, 8 to 12, 10%, 12 to 16, 15%. Like that, the slab is being introduced. And for the senior citizens, if we talk about the tax thresholds, tax deductibility thresholds increased to 1 lakh rupees, which was earlier 50,000 rupees. And the updated return provision, which was earlier available for 2 years from the end of relevant assessment year, it has been increased to 4 years. And for the basically third and fourth year, the increased tax on the tax plus interest component would be 60% and 70% respectively, right? And there is reduced compliance burden for charitable institutions. Earlier they used to re-register or renew the registration every 5 years. Now it has been increased to 10 years. And now taxpayers are allowed to claim the annual value, means they can consider two properties as self-occupied property. Earlier it was one property with some conditions, but now it has been increased to two properties. Now let's see that how basically saving is there for the individuals or based on the revised tax slabs. So your income is 8 lakh rupees, then your total benefit would come to 30,000 rupees. This is there. And like this, it is increasing. So if your income is 24 lakh rupees, so your tax benefit would be 1,10,000 rupees. So your tax benefit differs as your income increases up to 24 lakh rupees because of the slab changes. And if your income is up to 12 lakh rupees, then your total saving would be 80,000 rupees. Total saving would be 80,000 rupees basically. Like that, it is these sort of provisions are there, and there would be rebate and all these concepts. So at various income levels, your saving has been indicated here, basically tax savings, and there would be concept of relief and all those concepts. So before making a final computation, you need to go through all those provisions. And there are some changes in TDS and TCS specific rates, like for rent, TDS threshold increase from 2.4 lakh rupees to 6 lakh rupees. TCS on remittance for basically educational purpose has been omitted, and higher TDS would be there only in case of non-PAN cases, not in the cases of non-filing of income tax returns for past 3 years. Those provisions have been omitted. And under LRS, the limit has been increased from 7 lakh to 10 lakh for basically thresholds of TCS on remittance under LRS. RBI's liberalized remittance schemes. And as on purchase and sale, both TDS and TCS provisions were there. So TCS provisions have been omitted. Only TDS under section 194Q is there. And for filing of a TDS statement, if there was some delay, so this was not considered as a criminal activity. Now the same has been applicable. The same is applicable to TCS also. And 206 AB, 206 CC has been omitted. And it is proposed that the forest produce some changes are there. Let's see that what are the various revised tax rates in the TCS cases. 194 TDS TCS cases, 194 LBC 25%, 30% to 10%, 206C 2.5% to 2%, and on LRS 0.5% after 7 lakhs it was there. Now it has been deducted to nil, taken to nil. Now various TDS related, like 193, earlier threshold was nil. You have to deduct the TDS on any amount. Now it has been increased to 10,000 rupees. 194A, some changes are there. Dividend specifically 5,000 to 10,000. 194K mutual fund related 5,000 to 10,000. Winning from lottery or horse races increase from 10,000 during your financial year to 10,000 in a single transaction. These threshold limits for the TDS has been increased basically. And insurance commission 15,000 to 20,000. Commission price on lottery tickets same. Brokerages same. Rent 2,40,000 to 6 lakh per annum. Professional services 194G, very important, 30,000 to 50,000. Enhanced compensation 250 to 5 lakhs. And LRS 7 lakh to 10,000. So these TDS thresholds amendments have been done. Other some amendments have been made, like introduction of arm's length, suitable arm's length price scheme for scheme for calculating the arm's length price would be there. Based on that, you can calculate the arm's length price for a block of 3 years. So there is no repetitive compliance. There will be no repetitive compliance, and safe harbor rules expansion would be there. Tax certainty would be there in electronic manufacturing schemes, and tonnage scheme has been extended to inland vessels also. And for AIF, tax certainty would be there for specific benefits to ship leasing activities, and like that GCCs would be there if they are established in IFSC. So for IFSC, various amendments have been done. If you want to go through that, you can go through budget highlights, because those are some major amendments, but not relevant for everyone. These are specifically relevant for IFSC based companies. Some amendments in custom duty provisions there, like a basic custom duty on the cobalt powder, lithium ion battery, scrap wastages. So these have been fully exempted. 37 new medicines and patient assistance programs included in the exemption list. 6 life-saving medicines would be with a concessional duty of 5%. BCD on frozen fish and like those items have been reduced from 30 to 15% to 5%. And some other provisions are there where various amendments or reductions in the basic custom duty has been done. There are some amendments in GST also, like there for the input tax credit availability as per section or block input tax credit block on section 17.5D on the various plant and machinery used for self construction. So earlier the word was plant or machinery, now it has been substituted with the plant and machinery from introduction of GST Act. So it basically removed the scope of open interpretation, and now the plant and machinery, if used for self construction, then the ITC for the same would be blocked. And there are some changes in the input service distributor provisions relating that how they distribute the RCM services. So please go through that. So these are all basically general provisions, direct tax, indirect tax provisions introduced by the budget, and other like various schemes. Various schemes are also there for various sector specific things, and for IITs, IIM, for IITs a major contribution would be there, like and for doctors basically more fund will be provided to increase the number of seats. So, and for school specific various funds have been provided for digitalization in the same, for upgradation of the same. So like these things have been introduced by the Union Budget financial year 25-26. So thank you so much. This is your friend Jatin Agarwal. I think that this video will be useful to you and will definitely help you in this in your interviews as well as group discussions. Thank you.